We picked the perfect people for the after lunch crowd, huh?
Make sure everybody's woken up.
Well, thanks everyone for having us here today. We're super looking forward to having this conversation with Brad. So let's get right into it, because I'm sure you and I could go way beyond our 20 minutes if we if we wanted to. So let's talk about Ripple's vision to kick things off, the Internet of Value. What's the vision there?
Yeah, our view has been since the earliest days of the founding of Ripple that there is an opportunity for money to move the way information moves today. We talk about technologies like TCP/IP and how data interoperability has completely transformed how we access any information. Yet we still live in a world where to move my own money across networks, across currencies, the fastest way to do that's on an airplane. That's a crazy statement when I can go stream video from the space station, and yet if I want to get money to Istanbul tomorrow, drive to JFK and buy a ticket on Turkish Airlines. It's not JFK, Dulles, wrong city.
So let's talk about the future payment systems. What does it look like in a cashless society? Will we ever move away from hard currency?
You know, I mean, there's obviously some countries around the world that are very invested in moving to, cashless economies. I think in the United States, given the my own personal point of view, this isn't really a Ripple point of view, but the diversity of constituents, I don't think we're going to get away from a cashless society anytime soon. I do think to the extent we can reduce friction in payments, we already, some would say, well, between your credit card and what have you, Venmo, we're getting there. But there's that long tail of 5 or 10% of citizens that I think it's going to be hard to achieve that. But for the people who are participating, to the extent we can reduce the friction measured by speed, time, and dramatically improve how the money is moving. The Internet of Value, I think, I'll just give you one quick example. My guess is that you, like almost everyone in the audience, gets paid every 2 weeks. In Europe, it's every month. In Asia, it kind of depends. Have you ever thought about why you only get paid once every 2 weeks?
I have not, actually.
It's because of the friction of payroll processing. Decades ago, it was a chore to go process payrolls. They said, well, we're only going to do this every so often. Now think about the second and tertiary effects. If you got paid every day, or even kind of in a weird way, what if you got paid every hour? I don't know why you need to get paid every hour, but if you got paid every day, your credit card bill, your mortgage statement, they've been built around the system of getting paid every 2 weeks. But now if you get paid every day, how does that change the nature of even the credit card industry or the mortgage industry? So my point being, when we talk about an Internet of Value, I mean, it does get kind of sci-fi Blade Runner-ish, where you have connected devices that become economic actors. That people talk about, hey, your refrigerator is going to order your groceries. Well, how's it going to pay for them? How is that going to flow? Are you just going to embed a credit card into your refrigerator? That would work if the average payment size is large enough. But do we not think there's going to be micropayments where people are spending a penny or a dime?
Right. Well, I would also imagine, too, where you have legacy banking systems in place and companies built around it, as you had suggested before, that's a big barge to turn around, if
For
you will.
sure. Yeah, one of the things that has made Ripple, I think, both successful and arguably controversial is I don't think about it so much as how do we turn the barge around as much as how do we help the barge be more successful. I don't think anybody here will be surprised that many in the crypto industry have evangelized things like overthrowing governments and down with banks. And from the earliest days at Ripple, I and we have taken the point of view that governments aren't going away. That sounds like a crazy statement to even say, hey, governments aren't going away. But look, we're at a blockchain summit. There are some in the crypto world who absolutely think, how do we get rid of governments? How do we get rid of banks? Ripple said, and I'm maybe pejoratively describing the banks and governments as barges, using your thing. So I don't mean it in a mean way, but the best way to have the biggest impact is to engage the system, to get the barge to be far more efficient in terms of speed, in terms of cost, in terms of accuracy. And then you can have a bigger impact in enabling the Internet of Value and, frankly, impacting the whole economy.
Right. Well, I mean, we're here talking about blockchain adoption, the outlook, the technology underlying it. And that's really been the theme over the past 4 or 5 years. But I feel like 2019, we're talking about implementation and putting theory into practice. And I think that's really key over the next couple of years to really make this a scalable thing.
Yeah. I'll give you 2 quick stories on this. So I've been at Ripple 4 years. And I remember one of the first conferences like this that I came to. And I remember feeling like I just walked into the alien bar on Tatooine. For those of you, you kind of walk in, you're like, whoa. We got some interesting personalities here. So, 4 or 5 years ago, I think the use case for crypto largely was just associated with Silk Road. And then we graduated to the use case for crypto being speculation. Now, on one hand, you'd say, well, speculation isn't great. It's better than being known as just serving illicit purposes. I think now we're seeing increasingly it is focused on solving real problems for real customers. And the hype cycle that has driven blockchain, has driven crypto, I think has slowly abated, partly as measured by the market cap of all crypto being down, roughly 80-85%. At the end of the day, the value of any digital asset, I believe very strongly, will be derived by the utility that it delivers. There's a lot of crypto out there that I can't figure out what it does.
Mm-hmm. Well, it's interesting that you are talking about how blockchain is synonymous with cryptocurrency, and with Ripple, the same thing as well with XRP, right? So what are you doing to dispel that and better educate the marketplace?
It's a really good question. One of the things that, Ripple, the company, and really the whole industry has struggled with is in part born of our own confusion at Ripple years ago in providing better clarity of what is Ripple, a technology company based in San Francisco selling technology to banks and financial institutions around the world. And then there's an open source ecosystem called XRP, the XRP ledger, that we can't control. We use it as part of our tech stack because XRP is so fast and so efficient. In contrast with other proof of work based blockchains, the average XRP transaction takes about 4 seconds. It costs a de minimis amount of money. And so it's about 1,000 times faster than a Bitcoin transaction and about 1,000 times cheaper than a Bitcoin transaction. So we have definitely, over the course of the last year, tried to do more to make it clear. We have a set of Ripple shareholders. They're investors in our company, and some of them include very large financial institutions. And then separately, there's people who own XRP. And those are two separate things. I've made the point that if Ripple, the company, went away, XRP would keep trading.
Right.
There's 100 exchanges around the world trading XRP these days. I think today there's somewhere around $800 or $900 million of global liquidity. And those are two separate things I think in the past have been conflated.
Well, I have a two-part question for you here. Let's go with the first one. It seems to be everywhere ex-US and more developed nations, Western Europe, they are adopting cryptocurrency technology, blockchain technology quicker than we are. Is that a scalability and regulatory issue? Is it, like I had mentioned before, we have these legacy systems in place and they don't have to worry about the old infrastructure? There's roadblocks here in the US, and what do we need to overcome that?
I'll introduce that question by first telling you, I grew up in Kansas. I go see my mom, and my mom will ask me, why doesn't you don't have that many customers, relatively speaking. We've announced 200 customers. And as a percentage, very small percentage of those are US-based banks. And so people ask me, why is that? There are a handful of reasons. I'll talk about regulatory in a moment. But one important one, frankly, is that as a percentage of transactions for, let's say, a smaller economy like Thailand, the number of cross-border transactions for banks in Thailand as a percentage of their total is high. The number of cross-border transactions for a, tier 2, tier 3, the percentage of cross-border transactions is lower. And so it's a lower priority on their kind of pain threshold of, hey, yeah, the current system's developed decades ago. It's really slow. It's very error prone, but I don't have that many. Now, the second one that I think you're touching on, and certainly I think it's great that we're doing this here in Washington, D.C., is some countries clearly have provided more regulatory certainty, clearer rules of the road. I heard it described just backstage before I get on that we've been asked as an industry not to speed, but we weren't given the speed limit. And so it's really important, I think, that governments globally provide frameworks, and it'd be nice if they're all the same, but they don't have to be all the same. It's just the companies investing and building capabilities need to understand what are the rules of the road so that we can hire and invest and understand when we go live with a bank in Singapore or Thailand or the Philippines, what they need to know to go live, and we can work within those constructs. The U.S., on one hand, I think the U.S. has done a good job, and the SEC's gone after some of these scams. There's definitely been fraud in the ICO market, and I think that's constructive and healthy to weed that out. But I also think, in contrast really to what we saw happen in the internet space in the late 90s, the U.S. provided clarity, and a lot of it was hands-off clarity, but there was clarity. And we don't really have as much of that yet with the U.S. government. But I'm excited for this afternoon because there's a whole bunch of regulators on stage later.
Ooh, that'll be the fun part. So my second part of the question is mass adoption in the U.S. and the J.P. Morgan coin made headlines in the fintech space a number of weeks ago. Is that similar to traditional cryptocurrency? Because to me, it doesn't sound like a decentralized product, even though cryptocurrency promotes decentralization. So what are the differences with what we traditionally consider crypto?
Well, let me start by saying I think it's great for the blockchain and crypto industry to have players like JPM leaning in. Thumbs up. Yep. That's great. That's the only nice thing I'm going to say about this. Okay, so I got asked this last week. I was speaking at a Morgan Stanley conference, and somebody asked me, there was this headline, set of headlines about, about the JPM coin. Right. And this guy was from Morgan Stanley who was interviewing me. I said, so is Morgan Stanley going to use the JPM coin? And he's like, well, probably not. And so, well, is Citi going to use the JPM coin? Is B of A going to use the JPM coin? Is PNC? And the answer is no. And so does that mean we're all going to have these different coins? And does that mean like we're back to where we are, where there's lack of interoperability? So like, I don't get it. One more quick thing on the JPM coin. So let's think about this. The JPM coin, they announced for institutional customers, if you give them $1 in deposits, they'll give you a JPM coin that you then can move within the JPM ledger. Wait a minute, just use the $1.
Right.
Well, I really don't understand. Like, if you're just moving it within the JPM ledger, and it has to be dollar to dollar, a one-to-one backing, it honestly doesn't actually. I don't understand what problem that solves. Now, back to my first answer, look, if it solves the problem of JPM being associated as they're leaning into crypto, yay. Mm-hmm. That's all I got.
Right. and understood. And I think that's confusion. Not only look, if this doesn't work out, you could be a comedian. So that's always a good thing if blockchain doesn't work out. But I think that's really what the issue is, even for the broader audience that does understand the technicalities like we do. It still doesn't solve that problem of scalability. So do we have to fix our payment system and focus on the underlying technology? Is that the answer?
Well, I mean, to your point around scalability, I mean, when I hear scalability, I think of two things. One is transaction throughput, but it's also interoperability, right? I think that there isn't going to be one network to rule them all. There isn't going to be one, you're going to have Alipay, and you're going to have maybe JPM coin, and you're going to have, banks, payment providers, you name it. How do we stitch them together in a way that is as frictionless in terms of cost and speed as possible? So if you want to send, it's Mother's Day and you want to spend $50, 50 US to your grandmother in India from your B of A account and have it show up in her Paytm account, like that shouldn't be hard. Yet today, you would never do that because the cost of sending the $50 would get eaten up almost entirely, if not entirely, to get the $50 there.
Right. So the natural question is, how does this ecosystem, what does it look like in the next 5, 10 years, how we're working to encourage mass adoption? Because, the original issue, as you had mentioned before, is we have fragmentation all over the place. And it sounds as if it continues to get more fragmented when the goal should be, mass adoption within our ecosystem.
Yeah. I think, and what we're seeing happen at Ripple, so as I mentioned earlier, Ripple has been very fortunate to have focused on solving a specific problem for a specific set of customers. As I mentioned, we have a couple hundred customers now, and it is about stitching that interoperability. We have, large banks, their average transaction size using our technology is 8 figures, more than $10 million per transaction. We also have small payment providers. The average transaction size might be $100. One payment provider we went live with, they used to charge $20 as a fee to the customer to send the money. When they went live with us, they moved that to $2. And of course, they saw volume spike. That's great for everybody. So, what this looks like to me is not this uniform, everyone uses Venmo. That world's never going to exist. Can I also digress to point out, like, how is it that Venmo and PayPal transactions are not interoperable? Speaking of these things, right. PayPal, for those who don't know, PayPal owns Venmo. To me, it's an example of the lack of interoperability, the non-homogeneous. You're going to continue to have that, lots of different networks. You need an underlying technology to make them interoperable. That is what Ripple has been focused on, and we feel really good about the traction we have.
All right, let's talk about blockchain technology overall. And I asked this question, and one of the people that we had on my show is blockchain I think magic potion was the word that we used. Is it going to be the be all and end all to
Pixie
solve?
dust?
Fairy dust, fairy dust, fairy dust. Like, is that going to be the one thing that solves all of our global financial issues?
No.
And that's the same answer we had.
Well, I mean, look, I think I'm not trying at all to talk down the potential and the impact of blockchain technologies on transactions globally. I think this goes without saying to this audience, but the magic of a blockchain transaction is allowing two parties to transact without trust. Today, every transaction like that goes through a central counterparty, whether it's a stock exchange, insurance. There's lots of central counterparties enabling transactions. And to do so, there's friction by speed, by cost, what have you. To the extent we can use blockchain technologies to reduce those frictions, reduce those costs, that's going to make for a more efficient global economy, period. We, Ripple, have chosen to focus on cross-border transactions because that correspondent bank is a central counterparty as they pass transactions through. If we can democratize and kind of flatten that, you're going to speed up transactions, you're going to reduce the cost, and that's a good thing. I think you are seeing lots of startups apply blockchain to different use cases. I do think the word blockchain kind of has become catnip for investors. I say it's blockchain just because investors will find that exciting. The question that I encourage investors, and really even entrepreneurs, to ask themselves, why am I using a blockchain if a database could work? Let's not assume that a database isn't all, I mean, sometimes that's a more efficient, more scalable, lower cost. There's sometimes when a blockchain makes perfect sense, but to your point, whether it's pixie dust or fairy dust or catnip, it's probably been overused. And I think the last year, what people have called a crypto winter, I think it's been healthy for the market. I think it's kind of, you've seen some weeding out. On the contrary, Ripple had a record year last year. We're in a great financial position and excited to keep building.
But see, that's what's so great about the markets, because one thing that does exist uniformly across the board is Darwinism, and it has a really good way of weeding out what's going to last and what's going to last. And again, it's such a young industry that it's just starting to evolve, and you will see other products and other technologies come on board. So I agree with you. It's not necessarily an unhealthy thing to see the transition in cryptocurrency like we saw at the end of last year. And also, to piggyback on your point, where blockchain is like catnip. I mean, we saw a couple of instances last year where companies were sticking blockchain at the end of their name, and you'd see like their stock price quadruple within one trading session because that was catnip for the industry, as you had suggested.
Yeah. I think there's a Kodak coin, which I never could figure out. There's a banana coin.
Yeah.
And I think the one you're thinking of was it Long Island IC
and then
blockchain?
they had so these anecdotes are funny, but it really does underlie just how much, not even the capital market space, but industries across the board are looking for this technology because, quite frankly, it is improving quicker than data and regulation can keep up with. So I agree with you. It's exciting that we're at that point now where we can start weeding some of these things out.
For sure.
So, so we have about 30 seconds left here. What's the outlook over the next 5 years? What do we look like?
I think the first outlook, I think while we've gone through maybe a rationalization, a weeding out, I am as optimistic as I've ever been, in part because it is forcing the industry to understand who their customer is, what problem they're solving, and make sure it's actually solving it. So I think, look, the strong and healthy will survive. There is no doubt these technologies. I moved to Silicon Valley 22 years ago in the earliest days of the internet. And I think, we are talking about the SMTPs and TCP/IPs of the next 20 years. And just to be clear, SMTP is the email protocol, TCP/IP is, HTTPs and TCP/IP are enabling the World Wide Web. So I think these are foundational technologies of the next 20 years, and we will certainly see which industries they get focused on.
All right, awesome. Thank you so much, Brad, for joining me today on
Thank
stage.
you.
And thank you, everyone.